All right, Let's see. Good afternoon. Welcome to another Wall Street Wednesday. Today is Wednesday, July. July. What am I doing? July. Today is Wednesday, September 19th, September 15th, 2021. Let's start this again. All right. Welcome to Wall Street Wednesday. I'm laughing at myself. Today is September 15th, 2021. This is my 62nd episode, and this is Professor Milligan. What's going on, twin? Before I forget, let me drop in my disclaimer. I'm about to give you my ideas, my thoughts, my opinions. For your pleasure. Anything that you do with these, please make sure you speak to your investment advisor, your broker, whoever it is you talk to before you make any investment decisions. The other thing is, remember, these are my thoughts, opinions, and I'm basically trying to teach you guys how to read my mind. What's up, twin? What's going on? All right, let's see. I'll give it a few more minutes. So the market bounced back today. It's been choppy the last week or so. So it's been choppy. I hope that the choppiness is not scaring you guys and thinking that we're headed for another recession. I can pretty much guarantee right now that another recession is not in the market for at least another year. All right, at least another year, probably longer than that. We've never gone into a major recession or major contraction or recession anytime we've had a classic yield curve. Those of you who had me in class know I always talk about yield curve. Could this be the time we have a classic yield curve and go into recession? Of course. But again, as I always say to you guys, if you're a betting man, a betting person, and you look and you say, wow, over the last 100 years, every time we've had certain situations we've had a recession, and when we didn't have those situations, no recession. If you're a betting person, you say, I'll take those odds. So again, just speaking of odds, I do not think that we're in for a major correction here. I do think the market's going to continue to run. All the signs are there, all the positive signs are there. And what's interesting is, which I said last week, I actually like this. I like this. If you've ever been trading the market, which a lot of people that listen to this call have been trading the market for a long time, the one thing you know that is that the market doesn't go straight up. Stocks don't go straight up. If you have a stock that goes straight up, what you know is that there's no support on that stock anywhere. And so once the buying stops, it's going to basically pull right back down. Now, the reason why I like these periods of consolidation, what's going on, Brian? The reason why I like these periods of consolidation, when the market and our stocks go through a period of consolidation, it gives individuals who want to take profits, don't want to be in the stock, it gives them a chance to actually get out. It gives them a chance to take their profits. It gives them a chance for institutions to step in. And that back and forth is basically just consolidating. As I would say, if you were building an apartment building, that back and forth is nothing but building a new floor. New floor, which is your old ceiling. All right, so that's what they're doing. So there's several stocks that I like. In fact, we'll talk about them. I'm writing another one down as I look at my screen. I'm just writing another one down. So I'm going to talk about that. Before I jump into that, let me do what we always do. Let's talk about the commodities. All right, been an interesting week in the commodities. A lot of stuff that we were looking at. We took our profits, we cut our losses, and we moved on. Here's what's interesting. Soybean went from a short to soybean now looks like a nice long position. Soybean just broke above its 10-day moving average. The commercials are basically closing out their short position. I'm not sure how much run you'll get in it, but definitely I would play soybean to the upside. I'd play soybeans long. The other one I'm looking at, which we've been talking about, is, and this is not me, I'm just reading the market. Natural gas is just on fire. It's just going straight up. There's a number of reasons why. And part of it is the fact that we have these storms in the Midwest and in the South, which basically is hampering delivery, slowing things down. But natural gas is tearing up. It's just on the run. Now, the other one we had talked about last week was sugar. And I had mentioned to you guys, stay short. Sugar is going down. Well, believe it or not, today it had a bounce. It moved above its 10-day moving average today. So you should have been out and locked in your profits. Other than that, so let me be clear on this. When I actually talk about something I see that I like in the commodities market, I'm looking at it both fundamentally and technically. So there's a lot of things I'm looking at right now that I see, but I just would not step forward and buy them or go short them. I just wouldn't do it right now. All right, so that's that. The other one that I always talk about is cryptocurrencies. The cryptocurrencies, and I talk about them from a technical standpoint. All I do is I look at the futures contract, I look at the price, the charts, and I get an idea of what's going on, and I report it back to you. So with all that said, Bitcoin, it's at major support right now. Support resistance. 48,000 is actually a major support / resistance area. All right, so what I mean by that is it's sitting at 48,000 right now, which is major support. Was old resistance, now it's sitting there, which means it's sitting on a major support. I would expect, unless something happens, again, understand this when I say something happens. We all know that the cryptocurrencies are driven by news, and news actually creates the supply or creates the demand. So with all that said, the one thing I can tell you is that Bitcoin looks like it's ready to roll. I would not be surprised to see Bitcoin take out from the 48, go out and take out, go to the 50. The next spot at 51,000, 51K. So I think from here we go from 48,000 to 51,000, and I believe if we take out the 51,000, you should be able to see Bitcoin take out the old high. It's trading extremely well. I don't buy, as you guys know with me, I always buy things that are breaking out, going to new highs, or going through their old high, and Bitcoin's not there, but it's trading extremely, extremely well. My comment to you guys all the time is I see less resistance to the upside and more resistance to the downside. Simply put, I think I think Bitcoin moves higher. Ethereum, same story. Ethereum looks really good. Sitting right here at resistance at 3,500. All right, right through it's 3,500. You get through this resistance at 3,500, your next stop is 3,800, which is the old high. You'll literally be attacking the old high at 3,800. There is downside from here to 3,200 and then 3,000. But again, it's trading extremely well, extremely well. And therefore, I like it. So I like the way they're both trading. All right. Can you check? All right. I'll look at that when I get done. I'm writing it down. I got to write things down. If I don't write it down, I won't remember. MARA. Okay. I'll take a look at that. All right. What else am I looking at? Okay. Cardano ADA. As you know, business-wise, application-wise, of all the cryptos, this is the one I like the most. I think it has the best business applications. But again, that's my opinion. Cardano ADA is in a trading range between $2.40 and $2.65. You get through that 265, you're in the trading range now between $2.70 and $2.70, and $3. And at $3, you're taking out the old high. All right. So they're trading really well. Cardano ADA, Ethereum, even Bitcoin, they're really basically one stop away from taking out their old highs. In other words, they got one trading range in front of them. If they can get through that trading range, they're attacking their old highs. I really like the way they're trading. I don't like Doji at all. All right. I talk about Doji because I know some of you had Doji, trade Doji, or Doge. I'm not sure how you pronounce it, but either way, how about this? It's a dog. So I'll just take off the E and call it what it is, dog. It's a dog. Trading between 23 cents and 26 cents. If you can get through that 26 cents, your next stop is 30 cents. If it doesn't hold at 23 cents, the next stop is 19 cents. And understand this is a Milliganism. The stock is trading at, the Doji's trading at, if it goes through resistance, it's trading at 30 cents. The old high is up at 70 cents. So this thing has a ton of work in it. And, this is what happens when a security is manipulated by what's the word I want to say? Propaganda, by people talking about it, talking it up. There's nothing behind it to sustain it. And it makes you wonder how much of a Doji that Mark Cuban owns, because all he does is talk about it. And I can't understand why, business-wise, there's just nothing there. The last one I'm going to talk about is Ripple. Ripple right now is at $1.12, which is resistance. All right, so it's sitting right at $1.12, which is resistance. You got support at 105. And if you get through that 112, your next stop is 127. And again, you're closer to your highs. You're really close to the all-time high on Ripple. You're just basically, like I said, 2 trading ranges away. It should say you're in the second trading range. When you get out of this second trading range, which You're sitting right there at resistance, and go through the second trading range, the last trading range, you'll be at the old high. So again, I like it. If it does not hold, at $1.12, your next stop is probably 96 cents. All right. Somebody asked me to take a look at another one, so I'm going to pull it up right now. Bear with me a second. All right. Let's see, cryptocurrencies. Let's see if there's one on here. Nope. I don't think this is what you want me to look at. This is, what is this? Marathon Finance wrapped Ether. I don't think that's what you want me to look at. I just typed in MARA. I believe that's what you gave me, MARA. And I don't see it. Is MARA a stock, a crypto? I'm going to the stock side now. MARA. Marathon Holdings? Marathon Digital Holdings? Is that it? I don't know. If this is Marathon Digital Holdings, I'll just wait to see. Can you? MARA, since you're talking about cryptos. I don't see a crypto with MARA. Don't see it. All I see basically is equities or some other type of derivative under the crypto. So I can't read a chart when I can't find it. Sorry about that. All right. Let's see what else I'm going to say. All right. So I was going to do that. So let me jump next. All right. I'm going to start putting some symbols. Bear with me a second. I'm just working with my charts. I'm about to put some symbols of some stocks I'm about to talk about in here. And we'll go from there. And what I'm doing now is I'm just kind of picking up on the things that we talked about last week. And if you have anything new, let me know. So let me send the first one. ASO we talked about. I like the way the security is trading. I'm pulling up the chart now as we speak. So let me give you some information on this. Let me not do, well, I'll do that. Let me do this first and then I'll come back to it. So ASO, Academy Sports Outdoors. The company, as I told you, I like the company. They reported earnings. They blew out the numbers. Stock was trading higher. The company decided to announce that they were doing, I believe it was either 15 or 18 million shares, secondary offering. All right, now, I'm about to say some things. It's the same thing I said about Bumblebee. I'm going to say it again on this. They announced a secondary stock offering. When they announced that the stock was trading literally at its all-time high, which was about $46. All right, they announced it. Believe it or not, that day, the stock came in a little bit, but ended up closing flat for the day. Now, when a company announces a secondary, and the market tries to sell it off and it closes flat, what the market is telling you, you have a hot secondary. In other words, the shares are in demand. Now, one of the things I had talked about in the past when I talked about ASO was that there was a huge short position in ASO. I believe right now, or I should say before today, the last numbers I saw was ASO had a 10 million shares short, just short of 10 million shares, and the security trades on average about 1 million shares a day. So on average, they said a little more than 1 million. I think it was 2 million. So on average, it says about four days, almost 5 days to cover the short with natural buying. Now, here's what gets interesting. Stock set, company blew out earnings. Company went to an all-time high, and you have a huge short position. Those shorts get squeezed. What institutional shorts will do is they will use this secondary offering to try and cover their short position. I'm telling you what they'll do. They'll use this volume in the marketplace to try and cover their short position without squeezing the stock if they cover it. Same thing like I told you last week. Once the market digests that stock, and they seem to have digested it well because as of today, they announced they did the secondary today. And today the stock opened up at $45.94 off a $44 pricing and went as high as $47.65. I like the way the stock's trading. I like the way they digested the secondary. I just like the way it's trading, and I think it's a stock that you might want to look at getting long. My opinion. My opinion. I don't think it's going to give you a bunch of points. I don't think the stock's going from 45, 46 to $100 in the next week or two. But again, for you guys that like to buy and hold, looking for a long-term, less stressful type of trade, I think you'll find one here in ASO. All right, I'm going to type in some other symbols. I know how you guys like when I type because sometimes I start talking and it gets broken up. So there's one. Let's see. Here's two. And I forgot that quick what I was going to tell you, so I got to do it myself. Here's three. Let's see. I'm going to put some more up, but let me just start with these right now. All right, let me start with these. All right, Bill. B-I-L-L, Bill. Over the last week, market's been really choppy. You've seen stocks come off and get sold. You see stocks take profits. Here's what's interesting. Stocks that Wall Street likes and stocks that Wall Street wants to own. I have to take a look at this. I'm writing it down. Bear with me a second. I'm writing down some notes. BNPL. BNPL. All right, I'll take a look at it later. All right, so what I was saying was, when the market sells off like this, as you guys know, it even comes in, the way we've been trading the last couple of weeks, and stocks come in, it's a chance for you to buy the stocks you really like. If you're an institutional investor, a large trader, there's a chance to buy the stocks you like. So what happens is, as these stocks that you like fall down to the bottom of a trading range, you'll see buying step in and they'll buy them and start trading them back up. All right. So, and as I explained earlier, I love when these things consolidate. So I'm going to finish this and go back, believe it or not. So Bill, which is Bill.com. As you know, last week we talked about it. Bill set a new high. Went to basically a little over $300. All right. Told you I liked it. And might as well, when I say set a new high, it basically touched it, but it didn't really break out. So it touched the old high, pulled back in, touched the old high. So anyway, over the last 5 days, Bill came in, and what it did was it came down to support. It tested support intraday and bounced off of it. All right. So what that tells me is that as much as this stock is up, as much as the market's going to become choppy, investors don't really want to sell the stock. They had a chance to sell it when it came off. They didn't sell it. So with that said, B-I-L-L, Bill, a move through the old high, I would get long. A move through the old high, I'm going to look to get long. I'm telling you right now, it's trading extremely well. All right. Now, I put another one in here and I got to go back and talk about it. We talked about Bumblebee. I told you Bumblebee was doing a secondary offering. I explained to you that when they announced the offering, the stock was at 56 or 57. They announced it. The stock traded down to the 54. They priced the 54 and change. They priced the deal at 54. All right. At one point, right after they priced the deal that day, the next day, the stock broke down to 52, like I told you it would. I said to you guys I said at some point, whether it be the same day, the next day, a week later, whenever that Bumblebee goes back through 54, where the secondary stock was priced, buy the stock looking for a trade. All right. Again, I said that. Reason why I said that is I've seen this 1,000 times. I'm also going to caveat that, which I'm going to repeat again. I don't like Bumblebee. I would not own the stock other than when I saw a chance to pick up a couple of quick bucks. Make a long story short, Bumblebee went through that 54, ran to 58 and change, 57 and change, almost 58. Great chance to take a profit. All right, nice little short-term quick trade. Again, I don't like the company. If it was a company I like, I would stay with it. I don't like the company. All right, so that's my story on Bumblebee. All right, let's see what else I put up there for you. Bumblebee. I also put up there for you guys Tractor Supply, TSO. TSO is trading between 202 and the old high. Between 202 and the old high, it came back to that 202 number. It tested it. Today it basically closed flat. Again, I like the way the stock's trading. It's holding up. Another one, not going to give you a huge run. But again, the move from 205 to 220, yeah, that's possible. I don't think you see a double. Anything's possible in this economy. I don't think you'll see a double, but again, nice trade. The other one I put up here was Couchbase. Couchbase, bear with me, BASE. All right, Milligan fell victim. I fell victim. I'll tell you why. I'll tell you what. I told you the stock was trading well. I told you it was in the trading range. I told you I thought it was going to break out. And I did not. And this I always talk about this, and this is my fault. I did not realize they were reporting earnings on September. What was that? I'll give you the date. They reported earnings on the 8th, September 8th. All right, so they reported earnings. I did not know they were going to report earnings. And the reason why I tell you guys is you always want to know your company reports earnings, because earnings are a catalyst that can drive your stock up or drive it down. All right. Didn't buy Base because it never went through the old high. And guess what? Base missed the number. They reported, the estimate was for a loss of $1.39. They lost $1.54. They lost more than was expected. The security sold off. It closed that day at 47, and the next day it opened up at 40, and right now the thing closed today at $36. So Couchbase got halved. Now, if you like the company and you want to trade it, you know Milligan, what I'm going to say to you, you got to sit back, be patient, wait for it to go through that 52 number. All right, the old high. You can try and trade it in here. The analogy I always give you guys, when stocks start dropping like this and they do that and they bounce, trying to trade them is like trying to catch a falling knife. You can catch a falling knife, but your margin of error just shrinks dramatically. And you know, if you make one little mistake catching a falling knife, you're going to cut yourself. That's why I use the analogy of falling knife. All right, let me put some more in here. I got some more. Let's see, what else? I got some more, so let me put the symbols up here. Again, these are stocks that we talked about last week, and I have a few I'm going to add before I open it up and start taking questions. Again, these are stocks that we already talked about. Let me make sure I got them all up here. Okay, cool. So let me send you these. All right. Costco. So let me back up. Bill.com. Tractor Supply. Costco. Upstart. They all did the same thing. They were trading at or near their all-time highs. Over the last couple of days, they pulled back and formed a trading range. They bounced off support, and they look like they're ready to actually go back up again. Again, I had mentioned this before. Consolidation is a way of getting. It's a purge. Consolidation. Just think about this. I'm looking at Base right now. So Base broke out at 33, ran up to 50, and then started backing and filling. What happens during this backing and filling? You can see the volume drying up and the range getting narrow. What happens during the backing and fill when the stock ran from 33 to 50? You had a whole bunch of short-term trades in there that said, "Oh, I got my profit, I'm out," and no buying was there. Then what happens is when it comes down to a certain price level, institutional as well as traders go, "It's cheap down here, I'm going to buy it," and they buy it. And that's what starts forming that trading range. The good thing about the trading ranges, and that's why I call it a purge, it gets the fast money out of the way. I'm not saying traders aren't coming back in the stock. I'm saying that, as you guys know, the more the stock runs, the more volatility near the end of the run, because you have the people now just taking profits, putting money in their pocket. All right? We've gone through a period of consolidation over the last 3-4 days. Nasdaq was what, down 5 of the last 6 days or something like that. So that's what happens. That's that period of consolidation. You know, the saying is keep your powder dry. Why? You're gonna be firing some shots real soon. Keep your powder dry. So Costco trading in a trading range between $458 and $468, which is the old high 468. Real simple. I think when we get some buying and the market starts to pick up again, you're going to take out that old high. It's a buy. Upstart. I am so glad for anybody who's looking to trade Upstart that we're having this period of consolidation. This period of consolidation is getting the fast money out and giving you the opportunity to get in and buy the stock. All right? Periods of consolidation are positive things. So that's Upstart. All right. Now, Hood. I told you Robinhood was not trading well. I told you Robinhood had broken down. And you can see that over the past, again, same thing on the past couple of days, Robinhood goes the other direction. It's gone down and it's hit support. And it's formed support right at the $40 level. Now we bounced off support today and it's up, it's up a buck or two. But again, I'm looking at this and I'm here to tell you, there's major support right here at this level. If it breaks this $40 level, you're going to take out the opening day lows, which was right around $33 a share. You're gonna test that. And if it takes up to $33 a share, which is the opening day low when it IPO'd back in July, I'm telling you, if it breaks that opening day low, from the opening day when it first IPO, and that's the lowest 33, it breaks that, this thing's headed down. And I don't know how far down it's going to go. All right, I'm just letting you know. All these investors that brought Robinhood up in here at 30, 40, 50, all the way up to 70, almost $80 a share, all of them that brought that stock, I'm telling you right now, that stock break 33, they're going to head for the hills. I'm telling you how it works. And if they break the IPO price, I'm looking for it now. Robinhood IPO'd at what? I'll tell you in 1 second. Robinhood IPO'd at $38 a share. So I got two numbers in. It breaks 38, it's testing 33. I'm telling you, if it breaks 38, it's testing 33. It tests 33, it's gone. Okay, good. Robinhood was up today. Mark my words. Mark my words. Robinhood, you got so much pressure. It's interesting. All right. And what you're seeing right now is what they call the bounce, the day cap bounce, Robinhood. All right. Now, before I go any further, I like that. DJ Nocturnal. All right. I'm putting some more symbols in here. These are stocks that we might have talked about in the past, but these are stocks that I looked at, and I'm telling you, I like the way they're trading. A few of them I own, and a few of them I might be looking to own. And I take that back. There's another one here and here that I would not own. All right. All right, here they go. All right, so let me talk about them. I talked about this last week. I'm pulling up the chart as we speak. I'm here to tell you something. If you're a long-term tech buyer, you're looking to buy something in your portfolio and hold it, Microsoft looks like a monster. Just looks like it's unbelievable. All right, let me explain what's going on. Microsoft has been backing and filling in a trading range since basically August 20th when it set an all-time high. All right, it's been backing and filling in there. It's been in trading range basically and it came back and filled a gap. There was a gap there on August 19th. There's a gap. It came back and filled the gap and then tested the old highs where it is now. Microsoft worked through that 304, 305 range, that old high. I'm telling you, just buy it. I'm telling you, buy it. It tested, it filled the gap. If it doesn't hold, I don't see why it wouldn't. Again, if the market corrects and it doesn't hold, yeah, it could come back and test that 290 level. But I'm looking at the way this thing is trading. And again, over the last couple of days, it sold off like everything else did. It sold off, again, came down and tested that, filled that gap, tested that support level, and it took off and went back up to its old high. And part of that's probably based on the news today. I like Microsoft. I like it. If Microsoft goes to an all-time high, new high, buy it. Just buy it. That's my opinion. Just buy it. Long-term hold. The other one I put up there was, I typed the wrong symbol. I apologize, guys. That's supposed to be NVIDIA. Me and my fat fingers, I do apologize. I just looked up and said, wait, that's the wrong symbol. I do apologize. All right. NVDA, NVIDIA, same story as Microsoft. Again, I'm looking at the chart. Anytime, if you guys can, when I start talking about these things, if you can pull a chart up and look at it, you'll see it. So what you'll see is going back to July, the old high was 208. It was a double top. The third time through it, it came and pushed right through it, right off of earnings. All right, so it was in a trading range before earnings between 209 and basically 198, 199. We broke through that. It ran for what, 1, 2, 3, 4 days straight. And now you have a new trading range between 219, 220, and 230. All right, 219, 230. And what's interesting is on the days when it's actually pulling back and selling off and consolidating, volume's starting to dry up. So again, I own the stock. You guys know that. I'm telling you right now, move through 230. It's probably going to be an opportunity for me to add to my position, and the stock will start to run from there. All right, that's what I see on NVIDIA. Checking my time. Okay, cool. All right, Microsoft, NVIDIA. My language stock, DUOL, Duolingo, IPO'd. It's an IPO. I'm looking at the way this thing's trading. It too did some backing and filling. I like the company. I like what they do. I like the product. The IPO chart looks okay. It was priced at, it's trading at a premium, huge premium. So first and foremost, I'll tell you that. Come on, Mike. Come on, where you? I got to find July. Come on, where you at? July. I don't see you. I know you're up here. I just looked at you. Oh, there you go. Okay. It IPO'd at $102 a share. The all-time low right now is 120. You're trading at 180. I like the way it's trading. If it goes through that old high up at the 175, 180 range, I'd be a buyer. Let me say it again. If and when it goes through that range of the 175, 180, the reason why I say 175 is the closing high is actually 175. Intraday, the stock hit as high as 81, but to pull back. So that's why I use the number 175. I typically, believe it or not, and that's a big swing, but I typically wait for it to go through the intraday high. But that's me. You can actually go through whatever they put as the all-time high, that's what I usually use. All right, so that's that one. Now the other one, SRAD, Sports Radar. You guys probably know more about them than I do. It's a sneaker company. They do sneakers. Bear with me a second. I just got to pull up some information for you. Boom. As soon as I find, there it is. All right. Listen to me carefully. Sports Radar IPO'd at $27 a share. The range was 25 to 28. They priced it somewhat in the upper middle, but at 27. The first day it traded, it opened up at $25. They pushed it up to 27. Oh no, I'm sorry. It opened up at 27 and it went as low as $24, closing at 25. The next day it opened up at 25 and change. They pushed it through the 27 to 27 and change today, but it closed at 27. Here's a Milliganism. I say it all the time. Anytime you have a company that's IPO'd that does not hold its IPO price, it is a short. It is a short. All right? That's my rule. All right? That rule is right more than it's wrong. So again, SRAD, there's no options on it. I went and checked. And by the way, it's an ADR. There's no options on it. The biggest challenge you have right now probably is that you might not be able to find stock to borrow because you got to borrow stock to short. But I'm telling you, there's more pressure to the downside of this thing than it's going up. All right. Those are the ones I have for you. That's what I wanted to talk about. I got one other. I do apologize. One other. That's what happened. The symbols are so much alike. I got caught with NVIDIA in this one. And that is NASDAQ. NDAQ, same thing. Stocks hit a new high, up there $200 a share. Did some backing and filling. Broke down with the market consolidation and so forth and trading in the market, the choppiness of the market. It's back up into the old trading range. Right here, the old trading range is basically between 200 and 195, so you're right back there. A move through 200. I own the stock. Well, let me say that. I own NASDAQ. I own the stock. And a move through 200, I'll probably add to my position. All right. Those are all the stocks I have for you guys. I'm now looking through to see if anything I need to talk about. So I don't see anything yet. Bear with me. See, I did NASDAQ. DJ Nocturnal. I like that, DJ Nocturnal. I love that nickname, DJ Nocturnal. That's crazy. You own NASDAQ. Good, nice trade. All right, so let me see. I got some here from Mr. Cornfield. I should have known. He's as he says, I'm at work, but I always have time for a quick chart read. ATLC. Woo. Here's what I'm talking about. All right. I'm doing Mr. Cornfield's ATLC. Let me put it up for you guys. ATLC. The reason why I put it up is stock had a nice breakout. Looks like they reported earnings. It ran from about 46 all the way up to 65. The next day it did some backing and filling, and then it just broke down. It literally broke down, and it gave back all the move it had, and it's back into the old trading range before the breakout. Interesting. There's a story here. There's a reason. There's something's going on. A stock, stocks do run, and it ran off a big volume for the stock. And then on the pullback, there's been no volume, but there's been no interest. This has all the makings of what you might call a short squeeze, but the bottom line, short squeeze usually lasts longer and might go higher. But there's something going on here. There's some type of squeeze. Now I'm looking at the stock, and the stock has a history. Back based on earnings back in May, the stock ran from 30 to 40. So basically, it did a 33% move at 1, 2, 3 in a week. This time it did what? It did from 50 to 65. So was that 15? That's another 30-point move, 30% move. And then it basically pulled back and gave it all back. I don't know. I'm not a bottom fisher, so I wouldn't be buying it here. And it looks like it's trying to find some footing. And again, if I was looking, you see the breakout, I'd buy it if it broke out and went through the old high, not before. Gabe, how are you, buddy? Long time no see. Thanks for joining me. Wow, some of you guys, I thought some of you guys are my oldest students, but now I look, Gabe was one of my oldest students. I've known Gabe, Gabe, I don't even want to tell how long I've known you, so I'm not even going to say it. But I've known Gabe a long time. And welcome, Gabe. CRL. Post. All right, the next one that Mr. Cornfield gave me was CRL. Charles River Lab. Same story. Oh, nice chart. Really solid chart. Solid chart. Tested and went to new highs at 450. You had some backing and filling off a light volume. Then it broke down. Now, don't get me wrong. When I say broke down, it broke the near-term minor support, came down into a second support level. It bounced off that today and moved back up to resistance. Now the resistance level you have is is at 439, 440 where it's at. You push through 440, you should challenge the 450. A push through the 450, it's going to go higher again. All right. So patience. All right, I'm looking at my time. I did have another one. Oh, BNPL. Somebody asked me about BNPL. It's not a stock, so I don't know what it is. I'm not getting so whoever asked me to do BNPL, what is that? Is that a currency? What is BNPL? I'm not getting anything for it. All right. I'm just looking through NASDAQ. All these are me. So you guys don't have much that you want me to look at. BNPL. That must not be the symbol. Is that the name? There's nothing there. When I punch up BNPL, I get nothing. Nothing. Affirm, I get. Affirm, I get. Technical analysis really won't work with Affirm now. There's too much going on. Acquisition, merger, sell this, buy that. I'm not sure what's going on with it, so I would basically back off. This is a mergers and acquisition, special situation. So, I would leave it alone. I'm talking about meat from the technical standpoint. There's not much I can say on this. All right, WST. Pharmaceutical services. I'm not a big fan of pharmaceutical companies, but trading it really well. Let me say this real quick. Anyone that does not understand what it means, I'm typing it up so you can go look at it at your leisure. Anyone that doesn't understand when I say a stock will actually run up, consolidate, maybe even back and fill a little bit, then run up, consolidate, maybe even back and fill, run up, consolidate, look at the chart of WST. All right? From a technical standpoint, this is a beautiful chart. Now, the last 3 days, so today's Wednesday. So on Monday, the stock sold off, broke support at 460, and tested old support at 440. The next day, it bounced, which was Tuesday. It bounced off of that, closed at 452, and today it tried to get to that 460 and failed. So a couple things to say on this. It might take a minute, a day or two, or a week or two to consolidate and then break through that 460 to go to the old trading range. But based upon what I'm seeing, again, if you're a long-term quality investor, which means you're not looking for the short-term trades, I'm not saying the stock's not going to run, don't get me wrong. I'm saying you don't want to actually look and say, look, I brought it at 450, now I'm going to flip it out at 500. If you're not looking to trade, but just look at quality companies you can put in your portfolio and hold, I'm telling you, this chart just looks fabulous. The key word, fabulous. I'm switching to just so you can bear with me, I'm switching to a weekly chart. I'm just telling you guys, this is, if I was teaching a class on technical analysis about backing and filling and consolidation and breakouts, I'd be using this stock. So nice one there, Mr. Cornfield. Just think, if I start calling you Dennis, that was my middle school coach's name, basketball coach's name, Dennis Cornfield. TSO. Is TSO the oil company, if I remember correctly, right? Yeah, I didn't do TSO, so I'll do it now. Oh, my goodness. Oh. I don't know. Technically, chart-wise, I see no reason to even play with this thing. The only thing I can say is it's trading right now at 11.5 cents. And if you know something, or it's a special situation, something that I don't know or somebody else knows, something that's going on, then then I would say buy yourself a couple thousand shares for 11 cents, throw it in the drawer and forget about it. Other than that, This this security has so much work in it. So much. Yeah, I mean, I can't even tell you what to do. And the near term high, not the all time high, the near term high for since 2020, the near term high is 50 cents, a little over 50 cents, 52 cents. You're trading right now at 11.5 cents. There's resistance all the way up. There's 1, 2, 3, 4. There's 5 resistance levels to get back to the old high. So I'm not sure what they do, but they need to have some type of major announcement, mergers acquisition type of announcement, catalyst that's going to drive this thing. Other than that, you're going to be in this thing for a long time. Just trying to, I don't know what to tell you. I got no answer for it. CLF, Cleveland Cliff. Didn't we talk about this last week? I'm on a weekly chart, so let me switch to a daily. Bear with me a second. Oh, wrong stock. That's the one I want. Okay. I think sorry, I guess gotta go to another chart. All right. The stock is at an not all time. The stock's at a high, the highest it's been since 2015. But just to give you an idea, the stock was in 2008, the stock hit as high as 120. In 2011, the stock hit 100. So it's been a really, really ugly, long ride. I'm not sure what they're doing, what's going on. It looks like it looks like you're trying to play a turnaround situation, which is a special event. Technical analysis is out the window with this thing. And the reason why it's out the window is because there's so much going on with it. It's got to be out the window. Yeah, it's just too much going on. Too much to read. Close that out. What's that doing open? Come on. All right. Cool. I got 12 minutes. Anything else you want me to look at? So I looked at I think I looked at everything you guys put out. I don't see anything. I don't think I missed anything. I'm looking through right now. Again, I gave you the list of stocks I like. You know what? I want to wrap this up with a little analogy for you. What's up, Joey? How are you? I'm going to give you guys an analogy. And when it comes to investing, I'll take a look at that, Andy, if I have enough time. But I got to get my analogy out. I really thought about this. If you are a trader, if you're a trader, you should have the same attitude as a major league hitter in the batter's box. Now, when you see the top, I'm talking about the all-stars, the Hall of Famers, the Rod Carews of the world, the guys who can just hit a baseball. There's a couple things they all have in common. And we have the same thing in trading. And one is they're facing a major league pitcher. We're facing the market. And major league pitchers have the reason why the great ones are great, they can actually disguise what they're throwing. They throw great stuff, but they can also disguise it. They can disguise when they're going to throw a curveball, make it look like they're throwing a fastball. They can break a slider, breaker, off speed, you get it. As a hitter, the first thing you learn in hitting, forget about being a pro, is don't swing at every pitch. Well, as a trader, guess what? Don't swing at every stock. There's so many things you're going to see to trade, but you don't swing at every trade. All right? The great hitters, what do? Rod Carew, great hitter. You ever watch Rod Carew hit? Here's what he would do. He saw a pitch he didn't like, he'd foul it off. And he would sit back. They throw another pitch, he'd foul it off. Don't like it. He would take the pitcher deep into the count. What was he waiting for? He was waiting for his pitch. He was waiting for that one. And when he got it, he swung at it. And he was successful more than he was successful enough to get to the Hall of Fame doing that. We as traders do the same thing. We should look at a trade, and just because you see a trade doesn't mean you do every trade you see. What you're looking for is the one that has everything you're looking for. All right? That's the one. Don't be fooled by fool's gold. Don't be fooled by what somebody told you on this and that. Do your work and sit back and wait for that fat one to come across the plate. All right? Develop the skills to have the patience to wait for the fat one. Develop the skills to see it when it's coming down, when the pitch is releasing out of his hand. Develop the skills to be able to read the seams of the ball and tell whether it's a strike, a curve. That's what we do as traders. All right? And the only way you're going to do that is to be observant and watch. But remember this, not every trade's a good trade. Sometimes some trades the best trade is no trade. Some trades, the best trade is no trade. When I was down on Wall Street, I rented office space from a firm, and there was a bunch of traders in there. And the guy who ran the desk and ran the firm, and a bunch of traders sitting there, I was sitting there with him, used to say, "You got to come in and trade every day. You got to come in and trade every day." And I say, "This is not basketball. This is not baseball. I'm not practicing my jump shot every day. All right, I'm sitting back and I'm waiting, and I'm very patient." The reason why I bring it up is that group as a whole lost more money. All right, going in and forcing trades. If you guys ever played any sports, any basketball, any baseball, any football, where you had to throw the football or throw a ball or bat it or shoot it, you know that when you force that shot, when you force that swing, nothing came of it. When that fastball came eye high, and you could see it so clear, and you couldn't stop yourself from swinging at it, but you knew it was going to be a ball because it was out of the strike zone. But you still swung it anyway. You didn't hit it. All right? That's when you got to show the patience and sit back and wait. And if you miss a pitch, he throws a nice fat one down the pike and you missed it, next. Step out the box, dust yourself off, step back in and wait for the next one. You don't have to trade every day, and you don't have to force the trades. Don't force trades. And if you guys have been trading for any length of time, you know that when things are going well, you don't have to force anything. You're making your money. When things aren't going well, no matter how much you try and force it, you're not going to make any money. That's when you do what? Foul it off, foul it off, foul it off. And the last one I'm going to hit you with as I look at this last stock before I jump is that, remember, the goal is to make money. You can't lose money sitting in cash. You cannot lose money sitting in cash. When you're not sure what to do, when you're not sure where to go, if you're not sure, you don't like the market, you can't find anything to trade, cool, sit in cash. Sit in cash. All right? You won't lose money sitting in cash. Remember, your goal in trading is what? It's not the thrill of trading. All right, if the only reason you trade is because of the thrill and the high you get from trading, then you need to go to Investors Anonymous, or Alcoholics Anonymous. You need to go to one of those. All right? The goal is to trade is to make money. The best way to trade, invest, and make money is to remove those emotions. And those emotions you get when you're gambling. It's not, you become emotionless. Read and see what's there. I didn't mean to go on this rant, guys, but it's been interesting because I'm getting emails and letters from people and all that, and I'm just trying to break it down. All right. What is this? I'm sorry. I put up here CARR, which is Carrier Global. Mr. Cornfield gave it to me. One of the things I talked about last time too is, you guys, when somebody comes on here and starts putting stocks and asks me to take a look at it, and I talk about it, take a look to yourself. It might be something that you might be interested in buying. I'm telling you right now, I'm looking at this chart and I'm going, wow, really interesting chart. Now, here's the deal. It's got a double top and a trading range between 55 and high of 58, 59. It's got a double top up here at 58, 59. So it hit it, old high at 57 and change, pulled back, hit that support at 55, 54. Then it went through and set a new high again, but didn't rally behind it and pulled back. And we had a bounce today off of support. You're right at major support at 54. I would say to you, there's some minor resistance at 57 and change, but you push through that 57 and change, it's really minor. You're going to attack that old high. So again, another one that, as far as I'm concerned, keep watching it. You get that move through 58, and change with really good volume behind it. You're probably looking at the stock that's going to run. Now, don't get me wrong. Again, and one of the things I look at is, I got 2 minutes to tell us. I'm looking at the chart. So one of the things I'm looking at on this chart is the stock ran from 50 to 52 and then consolidated. Then it ran from 50 to 55 and consolidated. So what I'm telling you is, when the stock does run, it's not going to run for 30, 40%. All right? For those who don't like a lot of volatility, this stock shows that it's not going to give you those kind of big moves. It seems to be more of a slow and steady. Again, now it's backed and filled. Again, but for me, the move would be through 58 and change, then you would look to buy it. All right, I don't see any more questions. I'm going to jump anyway because you guys know I like to record this. I like to post my recordings. I do appreciate you. I appreciate the stocks that you guys share with me. It helps me find new ideas and things to look at, so I write them down. So I appreciate that. Have a profitable week, and I will see you guys next Wednesday. Have a blessed day. Appreciate you. Professor Milligan out.